Watching On Point, let's take a look at your market news now. Asian stocks sank today with China shares plunging to near two-year lows. This as US President Donald Trump threatened new tariffs on Chinese goods over and above the $50 billion worth that he set to levy on that country from the 6th of July. Trump threatened to impose a 10% tariff on $200 million worth of Chinese goods, prompting Beijing to threaten retaliation in what's escalating to be a full-blown trade war. As risk aversion set in, so too did flight to safety. The Japanese yen, seen as a safe haven currency, firmed as investors piled into it. Japanese stocks got knocked as a result, with the Nikkei share average closing down 1.8%. Hong Kong saw negative sentiment, with the Hang Seng index declining by 3.2%. Chinese stocks followed suit, with the Shanghai Composite Index plunging by 3.8%. US stocks edged down last night, ending well off session lows. Gains in energy shares helped curb the losses accrued from fears brought about by trade war concerns after China's retaliation to the United States tariffs. The Dow Jones Industrial Average fell by 0.4%. The S&P 500 lost 0.21%, and the tech-heavy Nasdaq Composite Index was more or less flat, adding 0.01% at the close. For more on the markets, we cross to Arabile Gumede. He's at the Sandton Convention Center today, but he's still going to give us an update on the markets. Arabile, the rand and emerging market currencies taking a little bit of a hammering.
Well, it seems to be heavy risk-off trade that seems to be going on right now in Zinga. So clearly seeing the rand and many others take on quite a beating of late. The tariff story coming out of the United States is certainly one that will keep things in motion, and we'll hopefully chat about that as well. But you spoke about the negativity having come through from the US market yesterday to the Asian stocks this morning, and now certainly the South African markets as well, them faltering at the same time. So clearly not doing so well, down around 1.25%, a huge fall there. Financials as well, more than 1% fall on that front. But let me not take the shine away from taking a look at the European and local markets. It may be red across those boards, but it certainly isn't red when it takes a look at the likes of Bitcoin as well. $6,769 for one Bitcoin, 95,500 rand, that is, for one Bitcoin as well. Chris Gilmore, independent analyst, joining me today. Chris, it's a negative day across the board, but not really that much happening, really. What's really getting the market so down?
I think what's happening, Arabile, is you're getting what's called in investment parlance or speculative parlance a risk-off situation. Now, what that means is that you're getting a lot of confidence in the dollar in the US. Ironically, you've had Donald Trump pretty much going ballistic over the past week or two. You know, first of all, he walks out the G7 summit, and then we have this meeting with Kim Jong-un. Then he does this thing with the border, you know, with the kids in the cages and stuff like that. And, you know, you would have thought this was kind of negative. And then to crown it all, we have $100 billion worth of tariffs against China. And then he starts talking vaguely about putting people into space again with NASA. So, as I say, he's being even more erratic than usual. So against that, it seems quite strange that there's so much confidence in the US and in the dollar. But that's exactly what's happening. So emerging market currencies, like the rand, are all taking a bit of pain. I think the rand is taking more pain because of what's been going on with Eskom in the past few days. And, you know, I think, as we were discussing off here before we came on, you know, until relatively recently, Eskom really looked like it was going much better. We knew there were problems in funding, obviously, but we weren't aware of the problems associated with coal supplies, for example. So I think that may now start becoming a factor, whereas previously, in very recent times, it wasn't.
Yeah. We had this false hope element then, is certainly what we're saying, that, we had a change in the guard. We saw a new sort of leadership come into South Africa, and we thought, okay, perhaps there's a change. But clearly that hasn't translated into anything better as yet. 13.87 for a single US dollar, 18.26 for the pound, and a big pounding for the euro as well, 16 rand and 4 cents. Clearly no good elements inside there.
No, you're right. And look, I'm confident that over time we will see a lot of this confidence in the US dollar subside. Because I think an awful lot of these tariffs are a lot of bluff and bluster on behalf of Trump. Trump is nothing but a corporate thug, in my humble opinion. And all he's doing really is padding the arguments full of what he wants, knowing full well that the other side is going to scrape away at it, and that the resulting situation is going to be a compromise. So I don't think it's going to be nearly as bad as we currently think the situation is. So therefore I do think that emerging markets and their currencies will start to come back in the not too distant future. But I think it's going to be a rough ride for the next few weeks.
You spoke about the tariff situation happening with China and the United States. That's bound to be very big for steel importers. How big an impact should we expect it from auto manufacturers as well in South Africa?
Yeah, bear in mind that steel, and again we were talking off air about this, steel only accounts in terms of the final value of a motor vehicle for about 5%. Things have happened in the past 20, 30 years. There's an awful lot more in the way of electronics, leather, different types of acrylic compounds that go into a motor car. So steel in itself, in terms of volume, it's huge. In terms of actual value, it's not so big. So I think we have to bear that in mind when looking at the economic impact of tariffs on steel.
Yeah. Where do we look to then with this market? I mean, we're seeing some senses of negativity with regards to the main markets, but the US itself seems to be in a buoyant mood, despite the way the market itself is trading. But that economy seems to be going well. Why are we not following suit?
And we usually do follow suit. And it's a very good question you ask, because at this point in time, with the rand so weak, given the composition of our market, with so many large global companies in there, like BAT, like Naspers, for example, you should naturally see the market going up. But it's not. And that in itself is a cause for concern. So if you look at the SA Inc. stocks, the likes of the banks and the retailers, they're taking major strain. The banks are down over 20% since their peak back in January, February this year, at the height of Ramaphoria. So that's starting to wear a bit thin at the edges as far as our market is concerned. But I take your point, all other things being equal, given the heavy composition in our market of multinational and global stocks, we should be going an awful lot better than this.
Yeah. You point to the banking stocks. Financials today just down 1 2/10%. The industrials also down. Look, it's red across the board, but you have the gold sector climbing up 0.5%. Look, we're at the manufacturing Indaba at the same time. This is an industry that should be doing very well from a rand that is weakening.
Yes. Look, as I've said before, you can't use a weak rand forever. But at this point in time, given that the rand is so weak and maybe going weaker relative to the comments I made earlier in tandem with other emerging market currencies, that I think all manufacturers should be taking advantage of this and selling as much as they possibly can into foreign markets. Absolutely.
That said, inflation comes out tomorrow. Current account data comes out on Thursday. The rand perhaps 14 rand odd. Do you see a petrol story as well that leaks up to 16 rand and beyond also?
The petrol story is going to be, if nothing else happens, it's going to be horrible. Even if the US dollar oil price stays pretty much where it is at around about 75, 76. Because the rand is so weak that come July, I think we're going to be in for another nasty shock. And to your point, it all comes back into inflation, absolutely.
Yeah. You see inflation staying at around 4.5, 4.7%? I mean, they're hoping that it would moderate?
Look, I think this extraneous factor we're seeing now with the very much weaker rand, if it stays in place for a bit longer, then ultimately it's going to have a negative impact on inflation, absolutely.
Chris Gilmore, thank you so much for your time. Independent analyst talking just markets, how the economy is faring, just certainly where we head on to from this point in time. Let's remember that tomorrow CPI data does come out at 10 a.m. South African time. Where will it stand? 4.5, 4.7%. Want to keenly get an eye on, and we'll chat about it tomorrow as well in your markets. We'll get more business news after the short break.